A fully paid up policy means that all of your premium obligations have been prepaid. So depending on your age, if you're younger, you might have a little longer premium obligation, or if you're a little older, typically that might be 10 or 15 years. So all of our policies are typically going to be paid up, guaranteed no matter what. Even if you wanted to put more money into the policy, you couldn't. It's fully funded at whatever point in time is illustrated. Now, what I want you to be super cautious about is not all insurance policies are guaranteed paid up. Where this can become really tricky is when you're looking at universal life or maybe an indexed universal life policy. It might show that it's paid up on the illustration, but if you look really closely, that's based on guaranteed costs, guaranteed charges. And if the policy doesn't perform exactly like the illustration shows, then what you'll see is the policy is not guaranteed. There are reoccurring premiums that pop up in the future. Where that becomes an issue when you're using the universal life strategies is every single year, your cost of insurance goes up. As you age, naturally, it becomes more expensive. So if you couple the cost of insurance going up over time, in addition to lack of policy performance, so maybe the market has a really volatile year like we had last year, what you may see is that in the future, those policy premiums could come back up, especially when you're not expecting it, and the cost of insurance has become really high. So where I get really cautious is when you're 80 or 85 years old, if you need access to the cash accumulation and the cost of insurance is increasing, you could get some surprise premiums much later in life. So what I like to tell people is make sure you're really reading the fine print. Make sure you're looking, is it guaranteed paid up after 10, 15, or 20 years? With our whole life strategies, they're guaranteed paid up in the future. They're very predictable. They have very slow yet steady growth. So you know exactly what to expect and don't get any surprises in the future. How Prevail handles the whole life policy structures is it's guaranteed paid up in 10 to 20 year structures. So, for example, in a 10-pay premium, you'll pay that policy premium for 10 consecutive years, and then it's guaranteed paid up, you're done. The way we structure the policies is they're guaranteed after that premium payment period. So in essence, you've prepaid all of your policy fees over the course of the next 30, 40, 50 years. You've paid those all up front in like the first 10 or 15 years of policy life. So you won't have surprise premiums later in life, like when you're in retirement or age 80, there won't be any surprise premiums later in the policy.